You were telling me about somebody you spoke to recently who services a lot of international clients, and you were surprised that very few of them actually are taking India seriously right now.
So today morning, when I met this gentleman, and he said, in last 1 month we met 100 FPIs physically. Of that, 50% are underweight India and rest are just equal weight India. I don't think so. This kind of underweight we had seen in our history for a long period of time. Globally, if we look at our GDP share versus our investment share, people are 50% underweight on India. Now, this is a thumb rule. This is not a scientific way to look at things. But put these two things together. Anecdotally, people are probably underweight India or equal weight India. And looking at our 3G potential, they'll have no option but to become overweight India.
So that's the scope of further expansion from here on.
And, we could be lucky. As I mentioned, someone at the top
divine
is
intervention, right?
Divine favoring India. So if MSCI upgrades Korea out of emerging market to developed market, it could result into a flow of about $20-25 billion over next 24 months. It won't come one way. It will come over a period of time. But imagine those kind of supports coming into our market and making people more underweight than they are today.
Sure.
So my feeling, at lower level, there will be enough buying from domestic and global investors.
Let's talk about certain specific parts of the market. We have seen in the last 15-18 months, autos have come back. First it were private banks, then PSUs and Navota kind of. What is the one section of the market in your view which is really attractive right now, or perhaps under-owned and deserves a closer look?
So I think pharma is where there could be, where auto was say 18 months back. Under-owned sector, not many things favoring them and things slowly turning around. One, US medical supply is at a lower level. Their inventory levels are depleted. There could be buying from there. US FDA observations are now, even in critical nature, are saying that please continue to supply 75, 80, 85% of capacity. We'll make a token restriction on you. Third, generic pricing is now on the way up. Otherwise, generic suppliers are walking away. Put all these things together, cleaner business, good governance, cheap valuation, under ownership, and business looking better. I think this sector should do well in the days to come.
So after 5 years, pharma is not coming back on the radar. One section of the market, mid caps are at all-time highs. Small cap index still yet to cover that ground. And that excites the most part of the market because it's, retail likes that. A lot of multi-bagger potential, all of that. What are your thoughts on mid-cap and small-cap valuations also, and some theme which you like there?
So while overall small and mid-cap looks okay, I think there are pockets where there is a lot of euphoria, either because of restricted float or because of potential explosive growth or some interested party activity. Put together, we have seen some of the small and mid-cap and micro-caps running at valuations which, in our opinion, are unjustifiable. So my request will be, please stick with the quality. Don't go with tips and don't go with all those Telegram channel recommendations. Stay away from there.
Yes, because that is also what comes along with markets high, is that a lot of people get sucked into the fear of missing out kind of a feeling.
Invest without FOMO. Invest with conviction on long-term India growth story.
What are your thoughts on the earnings quality? This quarter gone by, there were fears of margin pressure, all of that, but we were kind of pleasantly surprised with the quality of earnings. What is the sense? Can we start improving on the trajectory?
My feeling is that margins will expand from here onwards. We had about 10% earnings growth for FY23, which is much lower than 15%, 18% at the beginning of the year. Next year's actual earnings growth will be higher than 10%. Maybe it will be 12, maybe it will be 13, but we will have a higher earnings growth than last year.